Welcome, ladies and gentlemen, to Commodity TV and a new edition of our online TV interviews. And today we have big news from First Mining Gold, and Dan Wilton, the CEO, wants to give us an interview and update on the pre-feasibility study. Dan, good morning and welcome to Canada. How are you?
Thank you very much. It's a pleasure to be here and up early this morning, our time, but always great to see you, Jürgen.
Yeah, that's super. And you look fantastic early in that morning, definitely. I like the tie, by the way.
I don't always look like this at 6:30, but that's okay.
Yeah, but it's super, fantastic. Hey, congratulations on your pre-feasibility study. I think it was a lot of work and it took you over a year to put that together. But I think the results are speaking for itself. We see like 335,000 ounces per year for over 11 years production. That's a big thing, I would say, in these days. Gold over $1,800, $1,900 an ounce.
Yeah, I think that's right. There's a couple of real takeaways from this study, and as you say, it's a culmination of more than a year's worth of work, but a lot of really good thoughts gone into how we've scoped the project. And in fact, we actually made the annual throughput a little bit smaller. We reduced the capital cost by about 20% for the life of mine. The initial capital from in excess of 800 US to 718 million US. But the real takeaways for us are exactly like you said, there just aren't that many projects like this out there that can produce more than 300,000 ounces a year in a tier one jurisdiction, already in a permitting process. So moving forward in a permitting process, and with all-in sustaining costs in the lowest quartile of the cost curve. I think it's a really compelling project. So still a lot of good work to do. But we're very excited about this as a really important milestone for us.
That's fantastic. Yeah, I saw also your total cash costs are like $558 per ounce. AISC are $645 per ounce. This is fantastic. Let's call it 700. Just to round it up, still with 700, you are absolutely in the first decile, I would say, of the market probably. And this is outstanding. Yeah. So the PFS is the pre-feasibility study. Yeah. And I think this gives us already a very, very serious orientation what this project potential is. Yeah. And as you said, I think as you said, $718 million, still an amount of money. How do you want to finance that?
Well, I think that $718 million is a concern for a day when we have our permits in our pocket and we're actually ready to start building. So our real focus right now is getting the project through the environmental assessment process. And to further that, we made some really significant additions to our team recently, including bringing on Steve Lines as our VP of Environment and Community Relations. Steve and his team previously, up for the last 6 years, permitted the Hard Rock project in Ontario. Very similar size to Springpole. And that project just got bought by Orion and ultimately Premier Gold bought by Equinox Gold for a total implied value of about $600 million US. So Steve's brought his team across and we're moving forward on this permitting process and on the environmental assessment process, but all going well. We're targeting submitting an EIS document this year, by the end of this year. And that starts kind of a 2-year process for us to get our final environmental approvals. And I think when we get to the point where we have those approvals, I'd be pretty confident that our share price isn't going to reflect the share price that we have today with a robust project like this. But I think there's still a number of different ways. I mean, 700 million, 800 million US is not an insurmountable amount of capital to raise. And there's lots of different paths, be it finding a strategic partner. And ultimately, when you get to that point, you just have to do whatever is the right thing for shareholders, be that us moving the project forward, us with a partner, or ultimately someone else moving it forward.
Absolutely. Now, that's great. Question. I saw in your data that you have like life of mine all-in sustaining costs, and you have years 1 to 9 all-in sustaining costs, meaning that you are splitting them off. So what's the reason behind that? Are you first, or do you first want to produce the high grades and then move to the lower grades to, let's say, pay off faster the project?
Yeah, that's actually a really important point, is that the first 9 years is actually the years where we're doing the primary mining of the deposit. So years 10 and 11 in the mine plan are mostly just processing lower grade stockpiles. But that's the result of a really well thought out mine plan that we and our consulting partners have put together that brings between 15 and 30% higher grade to the mill for the first, really the first 5 years. But we thought we wanted to show, because the last 2 years are really just processing low grade stockpiles, it's not really representative of what the core of the economics are like during the mine life, and that's really that year 1 through 9.
Okay, super. So I see you have calculated the PFS at $1,600 gold, if I'm correct. So what is the sensitivity? Because we are now at 1860, 1870. Probably we are soon over the 2000. Let's hope for this, yeah. And well, I don't see any reason why not, to be honest, because everybody's printing money like unbelievable.
Indeed.
But anyhow, how is the sensitivity? Yeah, let's say reflecting your project. Then let's talk about $1,800 gold.
Yeah, so for every $100 increase, it's about $150 million increase in after-tax NPV. It's about a $250 million increase in pre-tax NPV. So $1,800 gold, the rough numbers would be 1.3 billion. 2000 1.6 billion after tax NPV. And so we actually have a table in the news release that lays that out. We'll have more detailed sensitivities in the full document, but one of the things that this shows is a really, really significant leverage to an increased gold price with this project.
Fantastic. Coming back to the project itself with the EA and the EIA, do you expect any difficulties? Do you see any, let's say, hurdles you have to match? Or is this like a standardized process also with the authorities?
I mean, the process is reasonably standard, but every project is different. So, I mean, as you would remember, one of the legacy perception issues around Springpole is the fact that the deposit does sit under the shallow bay of a lake. And so we have to build some cofferdams and dewater part of the lake for the open pit mine. Now, people have always perceived that to be an issue. I think when you look in the pre-feasibility study and understand that we've actually had a German engineering group called Bauer who's come in, and all they do is build cofferdams all around the world for different projects. They've estimated it, scoped it out. Technically, I think we can put the technical feasibility of the cofferdams to bed. It's well studied, well engineered. It then comes down to the perception of the social risk, and that really is just down to a reflection of what's our relationship with our Indigenous and other local communities in the area. And we've got a really constructive relationship with our communities. Still lots of work to do for us to make sure that we're incorporating all of their thoughts and concerns into how we scope the project. But no, at this point, we don't see anything that's really a major impediment. And Steve Lyons, our new VP Environment and Community Relations, jokes a little bit that not only has this been done in Canada, but he's done it twice. So as a regulator, he used to work as a regulator in the Northwest Territories. He permitted the Meadowbank project with Agnico Eagle, which saved actually bigger footprint of cofferdams and dewatering. And as a proponent, he worked at De Beers and permitted the Gahcho-Kué diamond mine, open pit diamond mine in the Northwest Territories. So, as Steve says, not only can it be done, but, he's done it twice. So
he really should know what he's doing.
Absolutely. And I think it's one of the things that we still obviously need to continue to work on. I think every step that we take on this environmental assessment process is going to reflect, I think, a greater degree of confidence that this project is real, because right now our company valuation is like the project's not real. So, we think that represents great upside for investors.
Absolutely. I saw also in your data, in the PFS, you have 85.7% for gold and 89.5% for silver in the recoveries. Would you expect it to get that higher, or is this more like a maximum you would expect?
No, that's really, I think that's a well thought out number that we did a bunch of variability testing in the PFS. And I think that's sort of where those numbers came out. They're a little bit lower than the PEA. And I think what we found is when we're processing the lower grades, we tend to get lower recoveries. Not an unusual thing, but on a balance, it dragged that down a bit. But the next phase of test work that we're doing metallurgical drilling right now. To recover more met sample, where we can do some larger scale kind of bulk sample size and style tests in order to really try and understand how we can optimize recovery, both flotation recovery and from the CIL process or the cyanidation process. So lots of different things we can still test. We're optimistic that we can continue to get those recoveries higher.
Fantastic, great. Of course, you still have a lot of work to do for this year and next year. So question is, how much money is in the bank? Do you have enough to do that? And also, as you said, you are already doing like metallurgical drilling. What is the work program for this year?
Yeah, so money in the bank. I'm proud to say the company's never been in a better position than it is right now. As of today, I think we have in excess of $35 million in the bank, as we're just closing the second part of our silver stream with First Majestic, which the milestone of which was publishing this PFS. So that's coming along very well. And yeah, the total budget this year, we're more than well positioned to fund that, and don't anticipate that we're going to actually need to raise any capital all the way through this environmental assessment process, because we have a number of other assets beyond Springpole. As you'll remember, we own 40% of Treasury Metals, which is moving forward with the Goldland Goliath project. We've got our partnership at Pickle Crow with Ateco Minerals, who's spending money on their earn-in, and by I think within the next couple of weeks, they're going to complete the first phase of that earn-in. We'll have 125 million of their shares trading at 11-12 cents Australian right now, and great momentum there. And then we have all the other strategic assets in the portfolio that Keith Neumeyer and my predecessors picked up in 2015, 2016. So I think between those, there's lots of great options for us to continue to convert some of those other assets into cash, but we don't anticipate we're going to need to raise any money. So the work program, it's about a 10,000 meter drill program at Springpole this year, combination of metallurgical.
How much was it? 10,000?
10,000 meters,
10,000,
yeah. Combination of metallurgical, some resource infill drilling, some condemnation drilling, and some exploration. Got a couple of really exciting exploration targets that we're gonna go after this year. And it's really sort of a bigger metallurgical test work facility, not going right into feasibility study, because first of all, I think given that we're talking environmental assessment work, that we need to really scope the project from an EA perspective. We don't want to do the detailed engineering before we've done that work. So kind of kicking off feasibility study early next year, but lots of kind of continued trade-off analysis and optimization this year to make sure that we're putting the best and most robust and most environmentally robust project we can into that EA process.
Fantastic. As you just mentioned Treasury Metals with the Goliath project, would that mean that you say, okay, we have Springpole on the one hand we want to bring in production, but the Goliath is also, let's say, ready to be brought in production? Would that mean that you are doing like a double production scenario?
Oh, not really for us. I mean, the reason that we sold Goldland to Treasury was so that it would be self-funding and move on its own path. We remain a supportive shareholder. I'm on the board, and so we're very active in how that project is moving forward. But Treasury's now got its own CEO, who we brought on in December, Jeremy Wyeth, who's doing a fantastic job. And they're going to have a detailed study, PEA study out on the combined Goldland Goliath in the next couple of weeks, I think. And that should give investors a sense of how that project is shaping up. I think it's pretty exciting. So no, we won't. It's not our intention to be continuing to build Goliath. It's really something that I think we're supportive shareholders going forward. But ultimately, we've said we're going to distribute a bunch of those shares out to our shareholders around the middle of this year. So we're excited about that with all of our shareholders becoming treasury shareholders.
Yeah, fantastic. And that means you still want to benefit from the project, of course.
Absolutely. No, I think there's still lots of value to be surfaced from that project. It's a pretty unique, not quite the same size and scale of Springpole, but for robustness and ease of a project build, it doesn't get much better than that one. So we're excited. Well, we got our hands at all these things, and then you talk about Pickle Crow, where our partners have a 45,000 meter drill program on. You know, they drilled 5 meters of 30 plus grams last week at a Teco. And a lot of people don't follow that because it's an ASX listed stock, but they're doing amazing things and in that old high grade gold camp. And so I think we're going to continue to see a lot of momentum from them as well.
Super, fantastic. Dan, that was a great update. Thank you very much. We're already talking 16 minutes. That's really a lot. And yeah, I would say well done. Thanks a lot. And we look forward to get some more exciting news from you guys.
Thank you very much. Always great to see you.
Super, and you. Thank you very much. Ladies and gentlemen, that was Dan Wilton, the CEO of First Mining Gold. And you heard it, $35 million in the bank. Just brought out and published a fantastic PFS here with sensational values over 11 years of life of mine, 335,000 ounces of gold production per year, with all-in sustaining costs well below $700. This is outstanding. And also, I would say approximately $700 to $800 million to finance the project. This is also makeable, as they did a silver stream with First Majestic also, and I think things are really progressing well and looking well, and we keep you posted on that. So thanks for watching us. I would suggest you check out the company. Bye bye from Switzerland.